Good morning, ladies and gentlemen. My name is Vasil Dikov. I am a senior account manager with GDMFX, and I'll be the one who will be bringing you today's market outlook. We'll start with the North American markets and the events from there. The dollar weakened against most of its rivals on Wednesday as Treasury yields moved lower, which triggered a lack in demand for dollars among foreign investors. The dollar was closely followed moves in Treasury yields in recent days. On Tuesday, yields touched their highest level since the Brexit. Imports and exports were mixed, with the month-on-month data coming in worse than expected, yet the yearly data was higher than the previous for both of them. Today's retail sales data will be yet another important factor to take into account for September's 21st interest rate decision. The export price index for monthly and yearly basis was 0.9% weaker than expected at minus 0.8%, 0.6% higher than the previous at minus 2.4%. Import price index month-to-month and year-on-year 0.1% weaker than expected at minus 0.2% and 1.4% higher than the previous at minus 2.2%. The Dow was 4 points down, Nasdaq 15 points up, Dixie up to 95.37 from 95.34. The US dollar versus the Canadian dollar was 35 pips up, the US dollar versus the Swiss franc as well 35 pips down. Today retail sales on a monthly basis, retail sales excluding autos on a monthly basis, retail control, initial jobless claims, Philadelphia Fed manufacturing survey, capacity utilization, industrial production for the month. Moving on to Europe and the European markets and the events from there, we had the Swiss ZEV survey 2.7 reading. The Euro industrial production seasonally adjusted for the month was 0.2%, weaker than expected at minus 1.1%, and the industrial production WDA for the year was 0.2% better than the previous at minus 0.5%. The French CPI on a yearly basis was 0.4%. The euro versus the Japanese yen was 54 pips up, the euro versus the Canadian dollar 75 pips up, the DAX 30 moved with 70 points down, the CAC 40 with 37 down. Today we're going to have the Swiss National Bank Interest Rate Decision and a press conference along with that, and CPI and Trade Balance for the Euro region. Moving on to the UK, sterling managed to rebound against the dollar after data showed that unemployment and earnings have lowered after the Brexit. Investors chose to overlook the data and instead focus on today's Bank of England meeting and the expected dovish statement from there. Despite the rebound against the greenback, sterling lost ground against the euro and extended its biggest drop in more than a month versus the common currency. And it seems that for now the weakening pound is one of the best tools to support the UK economy in the post-Brexit climate. The weaker currency has helped boost exports and may very well manage to hold the current account in the 6-month period after the referendum, something that the Bank of England Governor Mark Carney has targeted. With that in mind, many in the financial world are seeing sterling depreciating to $1.20, $1.15 in the midterm. The climate count change was 0.6 thousand, weaker than expected at 2.4 thousand. Climate count rate in line with expectations 2.2%. Average earnings including bonuses 0.2% better than expected 2.3%. Average earnings excluding bonuses 0.1% weaker than expected 2.1%, and ILO unemployment rate 4.9%. The FTSE 100 was 25 points down, closed at 6,664 yesterday. The biggest mover was the pound versus the Canadian dollar, 145 pips up yesterday, followed by the pound versus the yen, 75 pips up yesterday. Later on today, we're going to have the Bank of England Super Thursday, the Bank of England minutes, the Bank of England Monetary Policy Report. Mark Carney is most probably going to give out a speech, retail sales excluding fuel on a yearly and monthly basis. Moving on to Asia. Asian stocks are trading lower on Thursday as traders pulled back positions ahead of a long weekend and with key monetary decisions in Japan and the US due next week. Japanese stocks got pressured by a stronger yen. Japan's Nikkei stock average slid 1.4%, taking its week-to-date losses to 3.5%. The cost for banks to borrow yuan from each other overnight in Hong Kong surged to a fresh 7-month high Wednesday, a move traders said was likely due to further intervention in the market from China's central bank. The overnight interbank borrowing cost jumped to 8.16%, its highest level since February 19, and up from 2.84 on Tuesday. The foreign investment in Japan stock fell to minus 479 billion yen versus the previous 1.9 billion yen. Foreign investment in bond investment in Japan minus 607.6 billion yen versus the 1,326.5 billion yen previously. The Nikkei 225 fell with 115 points yesterday, continued to fall today with more than 120 points down already. Currency pair movements were in the range of 20 to 40 pips across the board, except for the Japanese yen versus the British pound. And in the Pacific, Australia, employment change seasonally adjusted came out 3.9 thousand in August, below forecast of plus 15,000 and prior to the 26.1 thousand, with the unemployment rate seasonally adjusted at 5.6% versus the forecast of 5.7 and the 5.7 last time. Full-time employment stood at 11.5 thousand versus the previous minus 45.4 thousand, while part-time employment was minus 15.4 thousand from the previous 71.6 thousand. Participation rate was 64.7% versus the previous 64.9%. Inflation expectations dropped with 0.2% from the previous reading of 3.3%. The New Zealand GDP for the year second quarter missed forecast with 0.9%, came out at 3.6%, which was 0.6 better than the previous. And now with the commodity sections of the market, the crude oil stock exchange inventories dropped by 559,000 barrels in the week September 9th, defying analysts' expectations of a crude build of 3.8 million barrels. Oil prices rebounded in the nearly Asian trade on Thursday after falling around 3% in the previous session, supported by an unexpected fall in US crude inventories. Gold prices struggled near the lowest level in almost 2 weeks during Europe's session on Wednesday, ahead of a closely watched US retail sales report on Thursday, which is expected to shape the market's near-term interest rate expectations. The S&P 500 index had a range of 20 points down to 2,120 right now. Gold had a range of $11 at 1,321 right now. Silver had a range of 33 cents at $18.93 right now. Crude oil had a $2 range down to 43.7 right now. Natural gas is trading at $2.86 at the moment with a range of 12 cents. On Thursday, we're going to have the EA natural gas storage change. And as usual, on Friday, we're going to have the Baker Hughes oil account. That is all from me. Thank you very much and have a nice day.